Netflix is up after earnings. Microsoft is up after earnings. Tesla is up strongly after earnings. I think I see a trend. What stocks am I picking in the stock pickers market? Hang on. This is not financial nor professional advice. This video is for entertainment only. Hey everybody, and particularly to my subscribers and those of you that are kind enough to smash that like button. I appreciate each and every one of you. The channel needs your support because I'm a young channel. I'm trying to get going here, and we're starting to take off and have some good picks, and I want to share those picks with you. And the more you hit that like button, the more support I get from YouTube, which allows me to bring you more and more content. And the content we have is bullish now, and I haven't been able to say that for a long time. I spent much of the past year shorting, and now I'm forcing myself to buy stocks because the danger right now might be that these are low prices and that we're going to wait for a bottom that never arrives, and we're going to wish that we had bought the stocks. And even if it does go down more, these are relatively low prices, and I'm not betting the farm and going all in, but I am buying some stocks, and it's paid off so far. So far, Netflix is reporting that they're getting more subscribers. Microsoft says that their Azure cloud computing is doing better than was expected, and Tesla is up over 5% after hours, after reporting that they expect to deliver 1.8 million cars in 2023. And Musk in a comment said, well, we might hit 2 million. And you know, it's likely because he cut the price 20%, and then on some Model 3s and Model Ys, you're going to get a $7,500 tax credit. So he may well hit those numbers. So I think we might have a white swan event where the risk right now might be more that you're going to miss out on the prices that are low relatively now. Even if we do reach a further bottom, I don't think we have that much further to go, and you will have a relative bottom. I would not bet the farm on it, but I would start buying some stocks, picking out your favorite stocks and starting to dollar cost average into them, because I think in the latter half of this year, you're going to be glad you did, probably. Two stocks that I've talked about off and on over the last 3 or 4 months is ACLS and AEHR. These are both semiconductor equipment stocks, and they've done fantastic. And I have the feeling, I've been having the feeling, you know, I really should sell these. They've gone up a lot, but they keep going up. So they keep forcing me to hold them. So I will accept their results as long as they keep winning for me. Okay, so let's take a look at the charts. And excuse me, because I'm going to take a victory lap wrapped in the United States flag, because I've invested in these companies and literally have forced myself to invest when I didn't want to. Like they say, when there's fear in the streets, blood in the streets, that's when you should be investing. Well, I certainly have felt like this the last 2 months. And AEHR Test Systems, we're looking at the 6-month chart, and it's only $1 billion company, which is relatively small. And it's a semiconductor equipment company. They make the equipment that semiconductor companies use to make the chips. And that's why it's called AEHR Test Systems. They use their equipment to test the chips to see if they're okay and so forth. So if we look at the price to earnings, it's about 75. You know, that's way too high. there's no way I should own this stock, but it keeps going up. And you know, my experience with stocks is I've made more money owning stocks that I shouldn't own at high prices. This is as long as the market's going up. And this might be a fake bear rally, but I'm going to play it as long as the rally holds. It might be the real thing. I don't think it's going to go down terribly, just based on the action that it's shown. You know, because the news hasn't been that positive, and this thing just keeps going up. It has a life of its own. So it reminds me of Tesla in those days. During the time I was investing in Tesla, all the time it was never worth what it was supposed to be worth. Okay, and the only time I needed to get out was starting about a year ago, and I did get out. But I recently got back into Tesla a little bit, not a lot, just a little bit. But AEHR, I am going to hold on to this as long as the rally holds, and hopefully this is a turn in the market. So I'm nervously hanging on to AEHR, and part of the reason I'm hanging on to it is because it has such an outstanding earnings growth rate of 36%. You know, that is excellent. And what I've found is that the earnings growth rate is more important than the price earnings, at least for me, at least for the stocks I pick, at least for the money I've made on stocks. The earnings growth rate is always more important, it seems to me, from the stocks I pick during a bullish market, or even during a bear market rally that's going crazy. And we're not going crazy yet. It's still within bounds, and I think that earnings growth rate is going to carry it probably. The other semiconductor equipment maker that's been doing extremely well is ACLS Technologies. ACLS is its symbol. This is a safer stock. It's a little more jumpy, but it's recently come into its own, and it's got a more reasonable price to earnings of like 23. And it has an excellent earnings growth rate of 28%. And it's a little bit bigger company. It's about $3.5 billion market capitalization. So this is a little safer. This one I don't have conniptions about owning. I probably won't be watching the price action quite as closely as with the other equipment maker, AEHR. But both are wonderful investments. And if you look back on these charts, if you notice the box in the lower right-hand corner, the short, midterm, and long-term prospects are considered to be upward bound. So I think we're onto something, and I might be wrong in this, but I think it's a little safer to own a semiconductor equipment maker, the companies that make the equipment so that semiconductor companies can make the chips. I somehow think that might be a little bit safer. I might be wrong in that, but it seems to me that it's a little more of a specialized market. I would think that it would be harder for other companies to break into that business, and so that's why it might be a little bit safer. And then I love triple leverage bullish funds, and you can do that either if you suspect we're pulling out of a long-term bottom, or if we're in an intense bear market rally. But you gotta watch them closely, I think. But the first one that's been doing well is YINN, YINN, and that's a triple leverage bullish fund on Chinese stocks. For every dollar the Chinese stock index goes up, you make $3, and that's been a very profitable investment. And looking at the chart on YINN, where you make $3 for every dollar the Chinese stock index goes up, it's made 52% since the beginning of 2023. Wow. Okay, my plan is very simple with this. I plan to ride it up as long as it keeps going up, and then to take the money and run. Okay, so this, it could be a long-term investment. I'll give it a little play. I'll probably give it a larger margin the more money I make on it. But I think it is the kind of thing where I want to take the money and run, because I think it's a very seasonal thing. And it's spurred on by the reopening of the Chinese economy, because they're getting rid of the lockdowns to a large extent, and are more relaxed about travel, which should help. And boy, the Chinese consumer, after being locked in for so long, they got to be ready to spend, is my thought also. My other leveraged investment ETF is NUGT, which is a double leverage index fund on the gold miners index. For every dollar that the gold miners index goes up on the S&P 500, NUGT goes up $2. And it's been a very profitable investment. So it's not a direct investment on gold, but I think it actually might be more bullish, because as the price of gold goes up, they're going to make more money. And we know China's buying all kinds of gold, Russia's buying gold. They're trying to undermine the United States dollar, or give an option to the United States dollar, so countries can trade in the yuan, which is the Chinese currency, and they're setting up a gold exchange so the yuan can be exchanged for gold. I've talked about this a lot in previous videos. You might want to go back and look at those if you want to hear more of the backstory. But I think gold is destined to go up even more than the metals generally are going up. So I think this is a solid investment. I think I'm going to hold it for quite a while. And looking at the chart on NUGT, we can see that since the beginning of the year of 2023, which has been less than a month, it's made 26%. Okay, these leverage funds, they're just ridiculous when the market's in a rally phase, and that's why you got to watch them. But I think I feel a little more solid about the gold situation than with the China situation, although I think that's going to continue too. And the two are related, because China is propelling the gold situation because they want to build up their gold reserves to strengthen their currency, to make it an option as an alternative to the US dollar, especially for countries that want to buy oil and get a better exchange rate. So I think we're on solid ground with NUGT, and I plan to hold it for a while. That's all I got. That's the way I roll. We got to play these markets for what they're worth. I think they're worth playing to some extent. I'm not betting the farm on it, but I think we might regret not getting in on some of these prices, which we might be looking back on and saying, boy, why didn't we invest at least somewhat back then? So thanks a lot. And don't forget to smash that like button, subscribe if you haven't already done that, hit the notification bell if you want to be notified. And again, thank you so much.